Shout out to the home show. Thanks for having us. We just did that presentation at the home show, which was, by the way, one of the more fun presentations.
It was.
In the city of Toronto, first, what's going to happen to real estate prices?
I mean, if you looked back at our podcast from the beginning of the year, then you would think that I would think that the prices would go up another 20%.
Approval for a mortgage is like taking a picture and sending it to an underwriter and saying, will you approve this mortgage based on what this picture looks like at this exact moment? Okay, I want to start this podcast. I want to ask you a question.
Okay, I'm excited.
What is going to happen with real estate prices? Obviously, then I'm going to start telling you what I think, but like I want to know what you think. What's going to in the city of Toronto first? What's going to happen to real estate prices?
I mean, if you looked back at our podcast from the beginning of the year, then you would think that I would think that the prices would go up another 20%. But I don't think that's going to happen. That's not going to happen. I think it's going to take a year or so for things to come back. I think detached homes are probably going to level out. I think condos are going to level out a little bit too, but maybe come down a little bit further. And then in the next year or so, we'll see some sort of growth in a year, 12 months.
Why?
Just because I don't think that the housing market can stay low forever. And I think that in a year, interest rates are going to be lower than they are right now, which will hopefully, I know that we were talking about this quarter point here and quarter point here is not exciting anybody in the market, but I think in the next 12 months, like in 12 months, things will look a little bit differently.
Why can't the housing market stay low?
Because it's Canada's thing. I feel like that's like what, you know what I mean? Like we've always been kind of propped up by the real estate market. And maybe I'm hardwired into thinking that we should have a strong real estate market, especially in our bigger cities.
Yeah. I worry about that thinking.
Right.
I also I don't see any reason why housing prices will increase in the next 12 months.
Right. Okay.
I think that if you balance things out, like even though we're probably going to see another 75 basis points to 1% lower,
right,
bringing the prime rate from 4.7 to at the very least 3.95, if not 3.7% within 12 months. For a lot of reasons, labor, trade, and hopefully inflation cooperates because of labor, which I talk about all the time. I'm not going to talk about it again.
Okay.
The problem is first problem in Toronto is the glut of condos.
Right.
Like there's a 7-month supply of condos on the market.
Right.
And the argument is that like when demand comes back online and there's pent up demand because nobody's doing anything and naturally the market has demand and the demand's got to come back. But if you destroy consumer confidence and the labor market sucks, then demand dissipates.
Right.
And when demand dissipates, supply continues to increase. And then arrears are going up.
Right.
We just did that presentation at the shout out to the home show. Thanks for having us. We just did that presentation at the home show, which was, by the way, one of the more fun presentations.
It was a good time.
But we went over 2 important charts on mortgage arrears and mortgage delinquencies, which we can throw up here now for you. The first one here that you're looking at is the 90-day mortgage arrears from, this is Canada wide, and you see that they're climbing up to over 22 basis points.
Which doesn't sound like a lot when you say it.
It doesn't sound like a lot, but look at the chart.
Yeah.
And is only trending higher.
Right.
And then the second one here is from a Royal Bank article, which shows Royal Bank's delinquencies. And that is like, you can see the difference between Toronto, Ontario, and the rest of the markets. And it shows that the consumer is under a lot of strain. And if the Royal Bank has delinquencies that are this high as a percentage, and you would expect their underwriting criteria would be a little more stringent.
Mm-hmm.
What's happening to the private lenders in the marketplace?
Right.
And you know, like not just the mix and the REITs, but the moms and pops who took an equity line out to invest in $100,000 mortgage through a lawyer or something.
Mm-hmm.
And
that's at 90.
I mean, how many times have we seen people come to us and say, should I invest in this mortgage? A lawyer brought it to me or a realtor brought it to me. Nothing against a realtor or a lawyer, but the appraisal is like, we can say this all the time. A mortgage is like the approval for a mortgage is like taking a picture and sending it to an underwriter and saying, will you approve this mortgage based on what this picture looks like at this exact moment?
Right.
And when you get the perfect picture of an appraisal on a property, you can see that appraised value drop by 50%.
I mean, I literally spoke to a client today, 2-3 years ago, got a mortgage for $880, down to $850 now, got $100,000 second, house is worth $1 million, and he's like, I'm dying to do something here. There's nothing. And there's nothing for that investor either for the $100,000, right?
No, you have to work with the borrower.
Yeah.
So the reason why I'm bringing this up is that will bring more supply to the market.
Right.
Supply to a market where we're anticipating demand's going to come in because it has to, because rates are lower, because people are sitting on the sidelines, but this like hopefulness is going to be met with more supply.
Right.
Which is for sure, like this stage of the cycle, when rates fall like this, when the Bank of Canada lowers rates, this is when the defaults come out.
Right.
More defaults will continue to come out right now. And as the defaults come out, well, guess what? More supply comes into the market. And will we be able to absorb that supply by reducing interest rates? No, not right away. No, for sure not.
Right.
For sure not in 12 months.
I always I think I'm just stuck in the thinking of like, I remember when housing prices started to fall, I always had this thought that like it can only go so low, right? Until investors come in the market and start snatching everything up. But we're not seeing that. It's not happening.
You know, we talked about this a lot in like when we started doing the podcast. We would reference Howard Marks. Do you remember that?
Yeah. The pendulum guy.
Yeah.
Yeah.
And like this swinging from fear to greed never lands in, like, we're never in a perfect probably in a perfect equilibrium for like a very,
it has to swing by,
very small period of time. And I think right now we're swinging towards, obviously we're in the fear side, but we have probably further to swing.
Right.
And as a result, I think that we see values continue to drop for like, I don't know, like until we see significant rate cut, until we, shore up business investment in Canada, like until the Canadian people start seeing some bright spots on the horizon. And right now we're in stinking thinking.
Yeah, stinking
which
thinking.
You taught me.
Yeah.
And stinking thinking has us staring at our shoes and shuffling our feet and thinking we are no longer a productive economy. Per capita, we suck. Our GDP is going nowhere. Nobody wants to invest in our economy. We have no trade certainty. Like there is really, like right now, no bright spots.
Right.
That can change. It can change with the government focusing on these projects and increasing productivity and business investment coming back. And like, listen, at the end of the day, Canada's got a ton of resources. We should be one of the richest countries in the entire world,
right,
for our resources. This is why the big orange man wants to come and take us.
Yeah.
Long term, that's don't kid yourself, right?
Yeah,
like all the Canada
Greenland
talk is for that.
Yeah.
So, but like if we're just talking about the housing market, I mean, I get sidetracked so fast. But if we're just talking about the housing market, I think we're in store for like more pain.
Right.
And we got more condos coming online that just had to get built have to get finished, have to get puked out into the market. Listen, depending on the time horizon of how long you're going to hold stuff for sure, will prices be higher in 2 or 3 years? Yes. From today, yes.
Mm-hmm.
But we got to get there.
Yeah.
And on the road to getting there, I think probably a few bumps. Okay, well, thanks for having us. Bye.